Yo, yo, yo. Hey, hey, hey. Hey, da boo boo. Hey, good morning, everybody. It's a Thursday. It's time to do some Forex. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma! Hey, my name is Wayne. I'm a currency trader just like you. I've been doing this for 20 years and I still love it. It's the greatest and purest business in the entire world. We buy and sell money. How cool is that? The valuation of money changes for a multitude of reasons. It could be things like international trade, because remember, a currency won't change valuation unless you pair it against something else, which means you have to trade it for something. It's a medium of exchange. So how much do you get for that exchange? A lot? Less than you used to? Okay, well, that's important. But then if you get less for it now, why? Why is that? And sometimes what happens is the government comes in and adds more paper money, adds more paper money, adds more paper money, adds more paper money to the money supply. And every time you do that, the money gets worth less and less and less because there's more and more supply. So interesting, right? So we got to look at things from a central banking point of view, which oversees things like interest rates and money supply. We got to look at things like from the fiscal point of view. Is the government printing money, like literally printing money? Remember, the central bank doesn't print money. The Treasury prints money. So is it the Treasury printing money, or is the Treasury borrowing money from foreigners and then giving it away? Well, when you give it away, you can invest it and get a return, or you can give it away and have no return. One is productive and has a return on investment. One is not productive and has no return on investment. Well, if there's no change in productivity, then you get inflation. Ha, 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 ha. So there's so much things going on. And then we got our technical analysis. What does that tell you? Is this the right price? And is this the right time to buy or sell? I don't know, but it doesn't tell you to buy or sell. It tells you, is this the right time to buy, or is this the right price and time to do whatever you want to do? So that's what we do. That's why we're here. Ask questions, get involved. I will do my best to help you and share everything that the Wayne has learned after trading currencies for these 20 years. So anyways, thank you for being here. Thank you for being a subscriber. And also, if you are not yet a client of TradersWay.com, I do recommend TradersWay.com as your foreign exchange broker. They are a boutique firm. And guess what? They seem to actually enter your trades into the interbanking system. I like that. The spreads are competitive. The swaps are amazing. The execution speed is much faster than the big bloated brokers that put 10,000 or 20,000 or 50,000 clients all on the one same server. You ever notice how they got one server? You're like, for that many clients? So obviously that would be slow. Slippage. So anyways, TradersWay.com. Join the family. So what's up? Okay, let's do around the world. Let's see where we is. Let's start. I guess we're right here. Okay, this is Pig Dog. This is something we set up days ago, and we're basically at the right price. Remember, we were looking at 34. Okay, now we're 15 pips below that, 14 pips below that. Doesn't mean it's over. But the thing is, 134 we picked out days ago when we were at 137.50. So we've dropped 250 pips, and this is sort of like a wake-up area. Now, using technical analysis and charts, right, what are we doing? Well, we have this assumption, is this the right price to consider doing something? Yes. Is this the right time to do something? Well, now we're talking about, well, what are the charts doing? And the right time would be like, let's say, some sort of reversal pattern. The pattern tells you it's the right time. Okay, we hit the right price, and you think it's going to go up. So a reversal pattern will confirm or deny, if you don't get it, if it's the right time. It might be the okay price. Oh, yeah, well, maybe this will go up from 134 and go back up. Yeah, maybe. But when do you pull the trigger? Now, a lot of people, what they'll do is they'll just throw down a limit order like this. They're like, if it hits 134, dude, buy it. Well, that's a bet. You're betting. I bet you anything goes up from here, dude. That's a bet. You're a degenerate gambler with no discipline. Ooh. Forked tongue, Wayne. Forked tongue. Yeah. Right? Well, I burned my mouth on my macchiato. So anyway, so now you use your technical analysis in the form of not just finding the right price based on technical analysis, but the right time. And so you would have to like maybe something like this at some point. And well, we're not there yet, so it's not the right time. Hua? Okay. What do you stink? Cool. So what does this say technically on this time frame? Oh yeah, Bubba. Okay, and you wouldn't be looking at this. But if you're looking at the higher time frame, this would be an interesting price. A little lower is fine too. You know, like this could make an interesting price. We don't know. I always call them AOs, areas of opportunities. You might think of it as, an area of interest or something like, you don't know what you're going to do here, but, so it's an if-then statement. If you observe a reversal pattern around this price, then you could consider buying it. Okay, so now you confirm or deny that hypothesis. Did you get a reversal pattern? No, then you don't buy it. What if you got one down here? You're like, yeah, I'm interested in that price. I can see there's some price action here, probably close to a 786. You got the roll reversal thing going on. So if around 133.50, let's say, you see a reversal pattern, then you can consider buying it. If you get a reversal pattern down here, why down there? Why at 132? Why would 132 be interesting to you? Well, again, that's a previous level of support. That would create a big, on a daily chart now, a big double bottom. So if you got a reversal pattern there, you could consider buying it. It would be the right price, but you don't know the time until you observe the reversal pattern. You got that? So you break this down. And by the way, I said this days ago now, maybe a week ago. We had our eyes on the price of pound dollar coming down to this level. So the first area of interest is 1.34. The second one is probably 1.35 or 1.33. I'll just say 3.5. So we're pretty close. And then the other one isn't down until you get down here, 1.32. And a way of thinking about it is, what percentage of bears do you think will take profit when it double bottoms and hits the weekly projected low? Wait, that's a monthly projected low. Hits the March projected low. What percentage do you think would get out? Oh, I would say a high percentage. Thank you, Henry. Yeah. ZAR going to 4, so that's nice. On its way to 6, right? Let's take a look at that. But thank you for pointing that out, Henri. Okay. Is it enough? Well, you could ask yourself that question this way. You could reverse fib it. You can find the old resistance. Okay. I was just guessing, numbers and figures, pulling the puzzle apart. Right? Is that what you're thinking? That's your... Anybody? Would you do it? Does the South African rate hike change my what? I don't. What hike are you talking about, Chan? This one? But what would that have to do with the dollar? I don't know. You're confusing me, bro. Jim says, did you upload last night's war? I think I did. Didn't I? You know, it's one of those things. I might have uploaded it but didn't click a little button. Hang on, let me just check that out. It's an easy fix if I did it. I don't know why I wouldn't. So, yeah. Okay. Yeah, it's there. Hang on. I was just guessing at numbers and figures. Ah, shoot. Yeah. Maybe it didn't save or something. Hang on. All right. Like, that was it. The fund rate. Yeah, but they didn't raise. They didn't raise yesterday, so that's what threw me off. Okay, I forgot to end the poll. Thank you for the 82 people that looked at that. Everyone's interested in pig dog. That's cool. Pig and CAD makes sense to me. Aussie Bitcoin makes sense to me. Great. Cool. Thank you for that. So anyways, going back to this, is this a turning point? Could be a rabbit, could be. Okay. Oh, I gotta relax, sit back a little bit. There we go. Intense. What do you think about something like this, y'all? South African Rand raised interest rates 4%. By the time you pay the exchange fees and difference in currencies and stuff, currency valuations, you probably take home 3%. Multiply that by, let's say, 50 to 1 leverage. Well, 150% return on investment per year. Well, not ROI, sorry. IRR. And of course, if you're leveraged 101, then great, you make 300%. So if you, let's say, sold a standard lot, for example, and it costs you $1,000 of your cash, and you held it for 1 year and then you added up all your swap payments, that'd be $3,000 in interest payments. Well, what if you're up because you held it for an entire year? What if you're up? Let's say you sell this at $1,550 and all of a sudden you find yourself at $1,150. Well, then you've made tens of thousands of dollars in pips off of your $1,000 investment, but you've also collected $3,000 in interest payments. And then you're like, yeah. But, this pair is even more sensitive to dollar strength because remember, they're leveraged, right? You're leveraging to make the trade. They're leveraging to borrow the money. So anyways. All right. So another thing just to consider if you are considering this, okay, this price here is the interesting price. Okay. We'll see this if it rolls around. And then looking further out, okay, the next interesting price is really a little bit higher. Not that high. This is sort of the next interesting price. But this peak now may have been, let's say, the psychological test of that number. And it's thinking down now. I don't know if that's true, but I'm breaking this down into how do you interpret what this is. It may have already peaked in the role reversal form, and maybe Okay. It's starting that process. Okay. Okay. You see what I mean? Like we may have already had that test. You want to look at it like lower high, right? Lower high. And so over the course of the next 2 weeks, we'll make a low, hopefully a lower low, and then a new lower high. Connecting the dots. I don't know if that's true, but is that your thought process? Remember, your thought process is so much more interesting. So you would have to then say, well, this is kind of the short-term top here, and that by next week, we should be heading down to 15 even Steven. Okay. Now that's South African Rand strength in the face of US dollar strength. In the face of US dollar strength. Wow. Well, maybe even though dollar strength typically is sign of risk off, well, maybe Rand being even stronger is a sign that no, there's a repricing of dollar assets. But it's not a global recession. It's not risk off. It's not Putin rolling in tanks. It's not what you're hearing. If it was what you were hearing, Rand would be like, we'd be at 16 right now. Okay. Another way of asking yourself, is this risk off or is it repricing of financial assets in dollar? Well, I thought I would introduce you to an interesting pair that we haven't looked at, I don't know, in a year or two. You want to look at maybe Pissy. Sorry, not Pissy. Kiwi Swissy. It's just such a weird place to have it. I changed the color. Even worse. What did I do? Oh, blue. I see what I did. I thought it was a coordinate. Font size, X positive, Y positive. Better. Okay. I guess I should save this. I was just guessing. All right. Template. What are we on? December monthly, right? That's monthly? Yeah. Template. That's not biased. Monthly. Pivot points monthly. Let's put that there and save that. Oh, frickazee. I clicked the wrong thing. Anyways, anywho, I want us to take a look at this type of price action. Kiwi Swissy? Yeah, Kissy. Okay, a couple of things I want to point out here. If you pay $88 and join FX Bootcamp, by the way, that's per year. Stupid cheap. Okay? If you join, what you'll learn, or one of the things you'll learn, is this predicts that. And so if that now has occurred, and then on top of that, changing colors yet again, because I like it, now you have what? Reversal patterns going on. Cool. Maybe a stabilization, huh? Interesting, right? So risk off, risk off, risk off, risk off, risk off, risk off, and stabilization. Doesn't mean reversal, but it is stabilization. Now, before you get all giddy about buying it, you should pay attention to price action. Again, something you'll learn at FX Bootcamp. Okay, so you should pay attention to that. But nonetheless, it's interesting. Okay. Now, maybe we can change to a different pair here. And look at pound Swiss. This is pissy. Okay. Now pay attention. This is an inside week. S1 predicts R1. So we're probably near the top, the logical top, the predictable top. Doesn't mean it will be the top, but the predictable top is R1, not this area. Okay, just so you know. So, but what does this say? Well, let's move in here. Okay. Pound dollar, for example, if we were to overlap the charts, would look like this. Actually, let me redraw this. It would look like this, a double topped, and then it's just been down. Well, for several days now, while dollar's been strong, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy. While the pound dollar's been falling for the last several days, despite crazy dollar strength yesterday, I think I'm up now 200 pips on my euro dollar short. This has been going up. So this is interesting because this is a safe haven. The Swiss franc is a safe haven. And if it was global risk off, like we were worried about tanks rolling into the Ukraine and there's going to be a war, or Omicron is killing the globe, the stock market in the U.S. is down, that means it's all over for everybody. Well, that's not what this pair is saying. And remember, pound dollar has been down hard. Pound Swissy is going up. Well, that shows, at least over the last few days, there's less flow to safe haven. Do 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 do. Are you talking about pivot points? Oh, you mean the price action pivot points? I see what you're saying. Yes. So insert indicators, custom price action pivot points. Yes, that's something that I invented. Okay. So it's based on price, not market. Is it the S&P intervening? Yeah, it could be. Okay. But before you get there, why would they do that? Why would there be central bank intervention? The Swiss National Bank would intervene if the euro got too weak. So is that the number? Could be. See, they want the Swiss franc to be weak. Okay, they want this down and they want this up. So did they intervene? It could be. Okay. They've definitely done it before. Okay. By the way, did you guys like the scalping lessons yesterday? I did it again in the day trading group a little bit. Let's do gold, oil, and Bitcoin. So let us start with my oh my WTI. Okay. So now we could move forward. Okay. We were scalping yesterday to make, I don't know, $1.50. It's up there now, your customer. Now, a bigger trader might trade this on an hourly, not a 1 minute. Because remember, the 1 minute traders caught this on a breakout trade, right? Well, this, my friend, is the exact same strategy, except it's not on a 1 minute, it's on a 1 hour. And in that scenario, you have a same pattern, a breakout, a pullback. That's where you buy, and then you let it run. Same exact technique. The only thing that changed is the time frame. Okay, so now what you got to do is either something like this, or if you prefer, it's the same technique. That's a price action strategy. If you prefer, you could do something like that. Or if you prefer, you can kick it off the future 4 hour 21. And if you want to help doing that strategy, you can do what's called a zero lag. And let's do it that way. And now if you zoom in, and let me get rid of the price action strategy, let me get rid of the Fibonacci strategy, you'll see this 21 EMA. This is the future, where this moving average will be in a bit. Okay? Which is a fancier way of saying, yeah, probably probably somewhere in here. If you're a bull and want to take it north, could be an opportunity. Okay. Another way of looking at it is there. Okay, so because this is going to move up more, it's going to continue moving. Wait, let me double check that is it shifted? Yeah, shift is 4. That's fine. Okay. Just trying to put the buy. So there's 3 techniques that say buy around 88. If you're a believer in the bullishness. Current low on this candle is 20. Okay. Okay, that might have been it. It's only a suggestion. Okay. Anyways, my WTI, the biggest part of that move, of course, is up, not down. And you know, if it's up, then it's stuck. A mentor of mine taught me that. Okay. Dollar stronger than gold. Interesting. Based on what's been happening since the end of November, we are 1 standard deviation below the mean. And right? Edward, that is the basic, yes. Or Edward was talking about what's the formula for pivot points? High, low, and close divided by 3. Or open plus high plus low plus close, okay, divided by 4. And bitty, 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 can't you see? I have to turn this. I think we were scalping the short here. Remember, we're talking, I asked you guys if it'd go to 30,000 or something, but this is just a quick scalp short, probably right in here. And then it's rebounded back, and now new lower low. Okay, so your questions should be, oops, as a trader now, you're trying to discern whether you think Bitcoin's going to go up or down. You're like, Wayne, that's always what's going to happen. Well, technically, what do you think of that? Nobody said it was sleazy. What a terrible day to have Coldplay in your brain. What happened to you? What happened to that guy? Oh, he's got Coldplay. No, that's so sad. Yeah. Okay. And then, of course, if you want to look at it now this way, ideally you get something more like that, and then something more like that, and then you drop it like it's hot. Drop it like it's hot. Drop it like it's hot. Okay? So you got to mark all your lines. Obviously, that's important. Obviously, that's important. Obviously, that's important. Obviously, that's important. So drag that out and see what's next. Get so there's gold, oil, and Biddy. Let us do dollars. All right, euro dollar making a lower low, which is, I think, okay. I'm not sure if I survived this. Yeah, I think I did. All right, so 99% of the time, I exit here, right? 99% of the time I exit there. So right before this webinar, I'm staring at it, and I have not quite 200 pips, but, you know, I have a pretty okay trade. Excuse me. So what I did is I moved my stop right above that wick. And it's kind of like a new scalp. I was risking 20 pips now. I mean, meaning if it came up, I gave away 20 pips because I didn't have the strength to just exit. So I'm risking 20 pips of profit I could just put in my pocket. But I looked at a bunch of other currencies and thought, well, so I moved my stop there, and it's now, where were we? 111.65, and now 111. Yeah, so now I made 20 pips. I risked 20 pips to make 20 pips. So yippee-ki-yay to me. But by the time this webinar is over, we'll probably be back up, and I'll probably be knocked out. So maybe it doesn't matter. Huh? Never happened, but hopefully I can maybe at least jam and get my stop to the pivot and say, well, now I got the maximum no matter what. So that's interesting. I don't know how stupid that was, but stupid is as stupid does, so it happened. And there's my entry, by the way. Nobody said it was easy. So anyways, that's that. Yep. Who cares? Yep. All right, so now we're down to my second level, my plan B AO. Okay. What do you guys think? Is anyone going to look for this? Is anybody going to look for that? King's been crushing it all night. Well, congratulations. Well, good. That's a sign of maturity. I don't know if it was acting crazy. I think what happened is the Asian and European markets reviewed what happened at the Fed and then placed their trades when their markets opened. I wouldn't consider that crazy. So one of the things I was watching last night, however, was this idea of if there was going to be a bounce. I had 71 as being an important number. Okay. And then in here, in the day trading group, I talked about how to trap it, okay, and trade breakouts. Okay. Cool. So how do you trade a breakout? Well, here's an example of it. Okay. And in that case, many hours after the breach of 71, we had a pullback and a sell at 71. Lovely. Easy money. Okay. Okay. La 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 la. Okay. Another look at it on this time frame on a 5-minute chart is somewhere in here. You could have played it out the same way where you have, okay, the breach, the pullback, gone. Okay. Okay. Then what? La 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 la. It's in the training course, bro. Cool. Which means now you'd be doing something like this. And I'd also mark this. So I'm basically saying that's my new zone for selling. This is what we do. This is how we do it. Oh, wait, that's the wrong 5-minute. I want to do this one. Hang on. That's just the how to re-enter the second chance. Oh, that one didn't really give you much. Okay. Okay, if you look at this, let's go all the way back here. So we were talking about this area at 71. Okay, you can see I was clearly showing people here what I was looking at. Okay, that's what this was going on. Okay. So you can see here, there's a clear breach, right? And this is why I did scalping yesterday to teach you guys how to do this. Notice that this is like 15 to 20 minutes of price action. And it's these wicks in which somewhere you would have found the strength to re-enter and use 71 as resistance, not support. And you're like, dude, those are tiny candles. Well, that's why it's a scalp. But it's a breakout type scalp, okay, in that direction. And like I showed you before on a different asset, you take that same idea, breakout, pullback, and entry, okay, and you get a pattern like that. And this was the area of support. This becomes a role reversal. What used to be support is now resistance. That's in my book. That's in 2 or 3 of the training courses. It's a key part of trading. Okay? And the interesting thing about multi-time frame analysis, what we call fractal geometry. So I did a presentation, I don't know, 12 years ago on chaos theory. And fractal geometry. And you'll see that these things are 2 important components to what we do as currency traders. The most important, of course, is you can tell a pretty person, a fabulously beautiful person, that you apply chaos theory and fractal geometry to the foreign exchange market, and they will suddenly listen to your conversation. And that, of course, that's the biggest benefit. Attractive people will find you mildly interesting. Cool. You're always looking for a threat, of course, and that's the inability to make a lower low. And the biggest threats to that are market opens. So my definition of fractal geometry, okay? How many people here have seen the original Blade Runner? That must have been, what, 1980? I don't know. How many people have seen that? That's with the young Han Solo. Young Han Solo, whatever that guy's name is. Yeah. There's a scene where he gets a photograph and he puts it on the computer and he talks to the computer and he's like, scan in. And it would go, and it would scan in. And then scan in more. Zoom in. And it was always perfect resolution. You could zoom into this photo and look at things in the background of the picture. And the more you zoomed in, it would just increase the resolution so you could always see things perfectly. Now, we know if you take a picture now and you zoom into the picture, it becomes pixelated. Okay? So in fractal geometry, the idea, if you want to take that as an example, is every pixel has the complete amount of information. So you can zoom in 1,000 times and it would be perfect resolution because every pixel contains all the information. Now, using Forex as an example, let's say you pay attention to yesterday's lessons on scalping. Okay? And I say, what you do is you trap it, wait for the breakout, catch the pullback, and scalp. And I show you on a 1 minute. The interesting thing about fractal geometry now okay? And this takes a while for you to get used to. But anyways, the thing about fractal geometry is I teach you this skill on a 1 minute chart. It's also valid on a 1 hour chart, a 1 day chart, and a 1 week chart. It's valid on a 5 minute chart, 15 minute chart, 30 minute chart, okay, 4 hour chart. Interesting, right? The same patterns will occur. And what you'll get used to is how each trader takes their turn. And so like I think I showed you on oil, we did a 1 minute scalp to the upside based on the opposite of this, which was more like up, sideways, break, right? But inside of that, on the 1 minute chart, it broke and did this. But it also happened on a 4-hour chart, or let's say 1 hour chart I showed you today, where on the 1 minute chart, it broke and went up for a while, then came all the way back down, and then someone else got their breakout pullback. It's the same setup. They traded with the same technique. The only difference is we did it yesterday and made $1 or something, $1.50, scalping the 1 minute chart on oil. Then you wake up today and over the last 12 hours, somebody else did the same trade. Now, when you become good, or let's say great as a trader, you can make decisions based on the 1 minute chart and then the 5 minute chart and then the 15 minute chart and then the hourly chart and maybe catch one or both of those trades. So you make $1 today, take profit on that because it's a scalp, so you're in it for a short amount of time. And then you're astute enough to say it's coming back. Why is it coming back? To set up the same trade on the higher time frame. So now maybe you scalp the other way. I don't know. And then you wake up in the morning, you're like, I set up that same trade on the hourly that I did yesterday on the 1 minute. So now I'm going to do it again on the hourly. And then, of course, you wouldn't just trade the hourly. You'd wait to get to the right price, which is the breakout pullback. And then you drop back into the 1 minute, 5 minute, 15. And now you scalp it again. But knowing that this scalp isn't based on, let's say, a 15-minute chart. This scalp is based on a 1 hour chart. So if you made $1 yesterday, you might as well make $3 today. Okay? So that's fractal geometry. Are you going to get that your first year? Dude, if you can't trade a 2155 cross, you're not going to get fractal geometry. But that I was teaching that, like I said, probably I think it was about 12 years ago in chaos theory. A butterfly flaps its wings in Indiana and causes a monsoon in India. Okay? What do I mean by that? Well, Putin rolls in tanks into Ukraine. What do you do? Okay? There's a union strike in Chile. Buy copper. Okay? That kind of stuff. $88 gets you access to all 65 hours of videos. What's in those videos? Everything. Look at this. There's that Euro bounce. I told you. I told you. Okay. Once again, the logic, or the let's say well, I'll just leave it at that. Got to remove that. And this again to the person, I think yesterday, someone kept talking about, but we're at the monthly M2. And I'm like, that's part of the math, because they said that when we were up here, they're like, that's next month's M2. I'm like, well, you're not following the math very well, because it's going to keep moving down as we move down. So even though now 24 hours has gone by, check this out. We're still at the monthly M2, the February M2, not the January. And that's the math. So I'm like, don't trade because we're at the next month's M2. You can keep an eye on it, but what's more interesting is what's going on here, which would affect the math. Okay. And when does it lock in? Well, we got a few days yet, right? It's only the 27th. So anyways, Kiwi is weak. GDP is down in New Zealand quarter over quarter. And we won't get new information till the end of this quarter. And guess what? It's going to be significantly improved. Huh. 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 Yeah. 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 Canada did not raise interest rates, eh? Cool. Do 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 do. Torturous. All right, so that's that. That's that. Whatever. Okay, now let's do some yens and get the heck out of here. Well, that's not risk off, but let's see. Okay. That's not risk off. Okay, that's not risk off. Let's take a look here. Euro. Stabilized, huh? I mean, instead of doing that, maybe just for congruency, you can do stuff like this. And what am I doing here? Why am I highlighting these things? Trap it like I just taught you on a 1 minute chart and a 5 minute chart. Okay. Beast. Oh, for sure. Not even, reasonable pullbacks, which is kind of interesting, huh? Look at this. Barely a pullback, and now a much bigger pullback. So for somebody else, look at this, what's going on here. Bulls have re-entered this market. Okay? When you don't get pullbacks, what happens? Okay, like look at how beautiful this pullback is, right? Think about the psychology of a bear here. Okay, lower low, lower high, sell. Lower low, lower high, sell. Lower low, three-wave correction. Lower low, lower high, sell. Okay? Lower low, right? No pullback. Lower low, just barely a pullback, right? Lower low. What happens is the rate of change increases. And the faster you make money, the faster you want to get out. So it forces people out, which is kind of interesting. The psychology is you can ride this out. You expected this and you wrote it out. Now you're comfortable. And now you're like, whoa, whoa, whoa. And you're like, oh my God, I hit a lottery. And as soon as you start making money, what do you want to do? I got to get out. I got to get out. For some reason, our psychology is such that when we're losing money, we tell ourselves, be patient, be patient. And then when you're making money, you're like, get out, right? And that psychology kicks in. What this did was it created vulnerability to the bears so that they didn't sell the role reversal. They didn't do it. So anyway, so now you got a higher high, higher low, and a bull is going to take that all day. And so now they got to figure this out. Now you might think, well, the longer term trend is still down. Okay, cool. But as a bull, this is an interesting op, right? So then get off the hourly chart, get on a 5 minute chart. Okay. And you can see that you got the breach. And then you can let it come all the way down, and your buy is down in here somewhere. Okay? Bottom, roll reversal. Okay? So now, okay, it either does this or don't. So that's why they invented the stop loss. Okay. So we can do something like, let's back this out a little bit. See if we can fit that in there. Okay. So looking at it this way, this still says longer term downtrend, okay, which you can see by these lines. And here's the mean. But notice how the mean becomes the support. Okay, because the mean, look, the big trend is this way. And the small trend is this way. You see? Lovely, tell your mom. So, some may think that it's going to come back around off the top. Who would think that way? A bear. Huh? What do you think? So you can wait for the smaller time frame if you're a bear to do this. So how do you do that? You trap it. Just like I taught you on a 1 minute chart, you can do it on a 1 hour chart, doesn't matter. Okay, find your lines. Maybe I'll use a more accurate line. Okay. So if you're a bear, one of the things you could do, and I'll have to make a smaller line here, is let it do its thing. Okay. And then you'd have a sequence like this. Okay. Your choices are sell off the top. That's how you range trade, or the break. And that's exactly one of the techniques I teach you in the training courses, for sure. It's in my book from 15 years ago, right? Trap it. Catch the break. If you're a bull, you have two choices. Buy it at the bottom. Buy off the break. Bulls only, let me do it this way. If you're a bull, bulls only okay buy at support, okay, and I'm going to take this kind of further. Let's do it this way. Bulls only buy double bottoms. Okay. And, or, okay. Okay. Higher lows. That's it. That's all there is. Every tool, every indicator, every technique you use will set one of those two things up. It's either a double bottom or a higher low. If you're a bear, double tops or lower highs. There is no other setup. Okay. Now, someone else will come along to you and say, oh, well, when the MACD crosses down, you sell it. And when the MACD crosses up, you should buy it. You know what you tell a person like that? Shut up. Go away. F you. Not necessarily in that order, but definitely at least two of those things. Take a look at our kitty cat. All right, let's do this differently. Do you like Fibonacci? What does Fibonacci say? Buy a dip. Oh, that's a higher low. Okay, so you let this find a top, and then you find a retracement. If you're using this tool, all you're looking for is the new higher high so that you can anticipate the new higher low. So it's a trend trading tool. It only works in trends. So right now, have we established the new high yet? No. So you have to wait for the new high. Okay. The way I look at it is I make this my buying zone. So as it goes up, the buying zone goes up with it. And then as it comes down, the buying zone is locked in. Now, I've learned to eyeball it, but you can use tools, and you can manually do it, or you could have this tool do it for you. And over the years, I don't ignore it, but I do other things too, where I'm like, well, this would be interesting, but I'd rather have a higher high. Okay. You can do other things like, well, this was important, and that gets you your 382. Okay. And then you're like, well, this was interesting, so that'll get your 786. But whatever. They're all doing kind of the same thing. Okay, cool. Well, wait, Canada failed to raise interest rates, and CAD yen is going up. Does that look like risk on or risk off? Because remember, we're trying to figure out the US dollar is strong, which is risk off. The S&P 500 is down big time, which is risk off. So if we were to isolate the United States, right? It looks like giant risk off. But is it? So, does this look like risk off? Again, Bank of Canada did not raise interest rates when they had a chance. And this is still going up. So is it the end of the world? Remember, risk off is based on slowing economic activity. Okay? And do we see that in the CAD yen? No. So, what does that mean, Wayne? Take it to the next step for me. Okay. Will the stock market be higher in 3 months or 6 months or 12 months? Risk on would suggest it would be. So you would be buying dips. Okay. By the way, notice that this is currently set up as bearish because somebody's playing the lower high. In this case, Fibonacci. So Fibonacci says this. Well, that would be risk off. Okay. You see that? 618. Okay. So then you're like, but Wayne, do I play this or do I play that? Well, that's where fundamentals would come in. And notice the fractal changes things, right? Cool. 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 Cool beans, man. Cool beans. Cool, right? So on this 5-minute chart, we have a huge higher high. You missed it, right? Amateur traders, they jump in here and they get knocked out here. Okay? What I teach you is to be patient and disciplined. I told a story yesterday to the day trading group. My memories of my early days of how I learned to do this. And I had to explain my years of pain and suffering and how it led to changing my behavior in more positive ways, which improved things, but then forced me to change my behavior even more. And not out of greed and fear, but out of anguish and pain. And from that, it led me to check out Fibonacci. Not that Fibonacci was sort of like the saving grace, but it was one of these things like you might find Fibonacci because it's in somebody's training course and okay, great. I found Fibonacci because I think I was buying here, just like I just said many amateurs did, right? And so after, I don't know, a year and a half of observation and thought and pondering and research and stuff, I was interested in learning about pullbacks. And in my research of ratios, for example, because my first year or two was confirming that this is happening and trying to trade that. And I did that primarily through relative strength first and then into technical analysis. But then once I always, in the beginning, I tend to pick the winning horse quite often, but maybe I bet at the wrong odds or something. I don't know what the analogy is, but because what I was doing was hindsight, meaning I would analyze what happened overnight to predict what might happen today, I didn't see the trade until it was here, for example, because I was doing like relative strength. And so I tended to do pretty good most of the time on the first most important part of the trade, which is what am I a buyer or am I a seller? And I only bought things that were bullish and I only sold things that were bearish, and I ignored everything in between. So that helped most of the time, not all the time, it helped most of the time. And so once I figured out how to buy dips and Fibonacci, having looked at that research, then I found Fibonacci and then I studied Fibonacci and then I got better, okay, looking at things like ratios and stuff. Great. So then I got even better now because I would spend all night to find that this happened, but then I would enter here. And if it didn't pull back, I never bought it. So that was good too. But then relative strength and Fibonacci together even were great on entering things that have been strong because they may be strong too in the near future, which means if it was strong yesterday, it'll probably be strong today, probably. But it never told me when to stop doing it. Okay? And that's where I started really refocusing on support and resistance and different techniques of identifying support and resistance. And then eventually I found pivot points. Eventually. And I started studying that. But there was little to no information on pivot points at that time. No, Oliver, chaos theory came much later, I think. It might have been closer to the time I was studying for the Series 3. And by study, I don't mean read books and think about it and learn the answers. I don't study that way. I don't memorize answers. I need to know. There's a difference between, and I'm not a good test taker because I don't think that way. And so I don't study well for tests either. Like, I can't just cram for a test and then do well and then 3 months later don't remember anything. I'm a very slow learner. I'm a very methodical learner. And but I will understand and I will know. But I'll still do mediocre on the test because I overthink the questions and all that kind of stuff, right? So there are people that are really good test takers that will probably score really high. But 3 years later, you ask them a question and they're like, oh, man, I don't know. Well, I do know. So anyways, where did the chaos theory come in? And that, obviously I traded commodities before then, but it got me thinking more about why. And the chaos theory is why. And, this idea of, the crop report says, we'll do this, okay? A report comes out. The U.S. Agriculture Crop Report says corn plantings were high. So corn plantings are high. Therefore, corn supply is high. Therefore, corn price will go down. Therefore, wheat supply will be low. Therefore, wheat price will be high. Therefore, what happens next? Okay. So then you're like, all right, so what's the next step? And I'll do this in a different color now. Well, if corn supply is going up because plantings are high, then farmers that used to plant wheat but are now planting corn will have to buy some tractor parts from John Deere or whatever, because you can't harvest with your combine set up for wheat. You have to buy whatever you need for that. So John Deere stock goes up. But corn needs twice as much fertilizer than wheat. So these old wheat farmers are now planting corn. So they need to buy more fertilizer than normal. So Potash Corporation of Saskatchewan price, right, goes up. Wait, so this is fertilizer. FERT. Okay, Potash Corporation of Saskatchewan goes up. So on and so forth. Okay. Okay, what else? You carry this out. Why did they plant? Well, now they planted because corn goes to feed, corn goes to food, corn goes to ethanol. But everybody knows sorghum is better. Okay? It's healthier. It needs less fertilizer. Can be used for food. Can be used for feed. And can be used for fertilizer. So anyways. So that kind of chaos theory, one leads to another, leads to another, leads to another. So now you can say, well, what's going to happen to global corn prices? What's going to happen to global wheat prices or that kind of stuff? Okay, well, if wheat prices are high in the United States and Canada because everyone planted corn, which lowers the value of corn, what do you think farmers in Australia are going to do? They're going to look at the wheat prices during their winter, look at North American wheat prices now, see that they've doubled, and they're like, ooh, so now they're going to plant wheat and not corn. Okay. So that kind of thinking is a little more chaos theory. This leads to that, leads to that, leads to that. So, right? So like a crop report, I want you to think about this. A crop report, okay, if you want to be like Axelrod from Billions, a crop report comes out and says one simple thing. Corn plantings, they're just seeds in the ground, up. Buy nat gas. Does anyone want to know? So a crop report comes out by the U.S. government. Corn plantings are up a lot. So Axelrod says, buy nat gas. Buy natural gas. WTF? Can somebody explain that? To me, it's obvious. Like, oh, look at that, buy nat gas. Well, now you have to understand the chaos theory. Lots and lots and lots of farmers, more than normal, increase in demand, okay, are planting corn. Corn needs, let's say, 50% more fertilizer. Fertilizer is sold by Potash Corporation of Saskatchewan, one of the largest fertilizer companies in the world. Potash Corporation of Saskatchewan doesn't actually give you potash. What do? Potash Corporation of Saskatchewan buys natural gas from Trinidad. Trinidad has a source of natural gas. It just happens to be nasty natural gas. By nasty, I mean full of chemical compounds of all kinds, including the stuff that's used to make fertilizer. So the Canadians go to Trinidad, negotiate with Trinidad, pay them hardly anything for their nasty, filthy natural gas, liquefy it, move it from ship by ship all the way to Canada. Then they crack it, pull out the potassium, the nitrogen, and all that other stuff inside the natural gas, and make product out of it for fertilizer, and then sell it to the American farmers that overplanted. So not only did the farmers plant corn, okay, which is not going to be worth very much when they go to harvest, but they also had to buy some stuff for their combine, which is an investment up front, and now they got to pay more money for their fertilizer because demand for fertilizer has gone up 50 to 100%. Meanwhile, Trinidad, they get the same price. Potash Corporation of Saskatchewan makes money. John Deere makes money. Monsanto makes money. Everybody makes money except the farmer. So once again, crop report comes out. Corn plantings are up. buy natural gas. Done. And you're faster than most people because you understand chaos. Something like that is chaos theory. Most people wouldn't read a crop report and think that way. Everybody farms a farmer. Farmers know that. What's his name? Sutter? You guys remember? I think that's his name. From the California Gold Rush. 1849 Gold Rush. Sutter. Is it Sutter? Yeah. And they're not going to give me a story about him. I don't know if this is... All right. This guy became filthy, stinking rich during the 1949 California Gold Rush in the Sierra Nevada. He ran a sawmill. Man, interesting, huh? Dude, these guys made Brandon. These guys made serious money, and it was really interesting. So, anyways, same concept. Now, the cool thing is you can go visit like the old mill and stuff. And even though there's 100 million people in California, which is not true, but probably 30 million, and there's people everywhere, and you're on the highway trying to get to South Lake Tahoe, and it takes you hours to go 60 miles. If you just get off the road, you can go to like Sutter's Mill. It's a beautiful part, right? I think you get off at Placerville. By the way, placer means gold dust. Okay, so you go to you get off at Placerville and you make your way up this tiny little road, and you eventually get to Sutter's Mill and stuff. And you won't find very many tourists. You'll get like there'll be 5 cars in the parking lot. And you're like, dude, there's 1 million people trying to get to South Lake Tahoe right now, bumper to bumper traffic. How beautiful is that, huh? And then you just get off the freeway. You're right there, and in one of the most important spots in California history. And nobody gives a hoot. Like, look, you're at Sutter's Mill. Nobody cares. There's more cars parked at Starbucks than at Sutter's Mill. And the cool thing is, as you go through the countryside, you can still see shafts and stuff and the old equipment. You can see the old equipment just laying around the fields and stuff. Pretty amazing. Okay, so anyways, you got a 5-minute role reversal setting up. Here's this tool I was showing you. Now you can see it's set. 9110 is the number. And the tool that, let me clear this out. This is what I did, because remember I was showing you how I eyeball it, but I use all these techniques. It's okay. Let me get rid of this. Let me just get this down to what the nitty gritty dirt band. All right, let's zoom in now again. Okay, we're looking at this. If you think it's going to go up, now nothing on this chart will tell you if it's going to go up. You must have made that decision hours ago, days ago, weeks ago. Okay, so if you think this up, how to use this tool? Well, the tool is saying, okay, this is an interesting zone. Maybe this, but maybe that. Okay? It could be this, or it could be that. Well, this is where it's at. Okay? So anyway, so you get in there, and you get your hands dirty now. I guess I'll leave it back on the fiber. Okay? You zoom in, and you get ready to do it. You get ready. and maybe it's down and then up. Yeah. Yeah, White. Even in Georgia, there was a mini gold rush, which is kind of interesting. I sure do. Do I have an interesting friend who you can have conversations with live? Yeah. I don't have many friends, though. I work too much. The funny thing is, all my good friends from 30 years ago, they work too much too. But out of my 10 closest friends, I would have to venture to guess that 6 of them have become multi-millionaires where they don't work. They have all the money in the world. They don't know what to do. And of my acquaintances, probably 2 or 3 are like that too, where they just have so much money. It's an awkward, different lifestyle. Like, it's funny, right? You're like, that's some FU money. I had one friend who had suddenly acquired all the money in the world, and he was a young man, and he was kind of distraught because he was a hardworking, smart engineer, and all of a sudden there was no need to work. Working was kind of stupid, and working for somebody else especially. And he didn't know what to do. So here's this funny, interesting conversation with himself, but I'll leave you with this story. And then I'll see you at swing trading at 4 p.m. if you're in my swing trading group. But anyway, so he's sitting around. He's got all the money in the world, and he's quit his job. And that's all he's ever known is working hard and working smart. But now he's got, 50, 100 million. I don't know. More than enough, right? More than enough, whatever the number is. And he's sitting there, and he's like, what do I do with the rest of my life? And he's like, I need to think about this. So he sits down, and he picks up, a $300 bottle of scotch. And he pours it into a glass. And he's like, what do I do with my life? Glug, 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 glug. Man, what do I like? Glug, 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 glug. I don't know. That's a big question. What do I like? Like, what would I want to do the rest of my life? What would make me happy? Gloop. Oh, I'm out of whiskey. Well, I'll get some more whiskey. Bloop, 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 bloop. Well, what do I like? And he's smelling the whiskey and he's tasting it. And he's, oh, this is beautiful. Look, 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 look. What do I like? Look, 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 look. He's like, well, I like whiskey. I'm going to start a whiskey company. No joke. And I think about 6 months ago, I was reading my Whiskey Advocate magazine, and there's an entire article about him and his whiskey company that he started 25 years ago. Yeah, he moved to Scotland and Ireland, and he learned the craft and everything, and all that kind of stuff. Came back and started his own whiskey company and all that kind of stuff. So, yeah. But anyway, so there's tons of success stories and stuff out there. And could you have an interesting conversation with him? Yes. But I haven't done so in a long time. But I think if I showed up, we'd be friends. Okay. Okay. Oh, the easiest thing about money is it compounds. So you want to become a millionaire? Stop spending money. Okay? Look at your productivity. Okay? Let's break this down. G is equal to GNI. Okay? National, okay? Domestic are the same thing. So let's rewrite this equation. Let's start up here. I'll do the whole thing in order. Okay, GDP is equal to GNI. Gross national product is equal to gross domestic product is equal to gross national income. What you make is sold in exchange for money. That's all that means. Okay? But this is irrelevant. It's redundant. So let's rewrite this equation. Gross productivity is equal to your gross income. Well, gross and gross are redundant. Get rid of that. Okay? We can simplify further. So you'd get rid of gross and gross. So if you're productive, you will equal, right? The more productive you are, the more income you'll earn. If you provide $1 million worth of value, somebody will pay you at least $500,000 for it. By the way, that's what companies do. Why would somebody spend $10,000 a month advertising on Google? Because they make $30,000 a month in revenue from advertising on Google. So why is Google a valuable company? Because they create value. If you can't do that with Forex or anything else, then you're not valuable. You're not going to earn much income because you're not worth it. So find a way to be productive. Okay. So if your income is based on productivity, what is productivity? So we can rewrite productivity. Productivity is equal to consumption plus investment plus any handouts you get from the government. Okay? Cool. What do most people do with free money? Most people. What do poor people do with free money? They spend it. Why? Because they need to spend it because they got no money. So they get free money from the government and they consume stuff. And then what happens to that money after they consume it? It's gone. Now, maybe you have a TV. Maybe you bought groceries with it. Okay, now, I is equal to I? No. Sorta. It's a different I. Okay? An I is investment. Okay? So, you have productivity, you earn an income, and then you invest the income. And the interesting thing about investment is it earns a return on investment. A return. Your investment makes money, which is income, which gets reinvested, which earns more income, which gets reinvested, which earns more income, which gets reinvested, which earns more income. So I don't have any money. Okay? Wealthy people are broke because they take all their income and they plow it into investment that has a return on investment, which gets plowed into income, which gets plowed into investment, which gets plowed into income. Poor people have a tiny apartment with giant TVs. Okay? If you were in my house, you would consider it a museum. Not because, I got fancy art on the walls or something, but you'd walk in, you're like, dude, this place is empty. There's no clutter. Like, there's nothing in this house. It's 90% space and 10% stuff. Well, I can't afford to buy stuff. Why? Because I'm broke? No, it all goes into investment. Okay? Now, do you know anybody that has like a small house and it's just filled with stuff? Stuff on the floors, stuff on the tables, stuff on the shelves, stuff on the tables. There's just stuff everywhere, right? Knickknacks everywhere. I can't afford that lifestyle. I'm telling you, I can't afford it. I own almost nothing. I don't consume anything that I don't need to live. Now, my wife would disagree and say I spend a lot. I said, no, that's investment, baby. I need this, right? But long story short, that's how you do it. Harvey doesn't know anyone with a small house. That's interesting. So anyways, I don't have stuff, right? I don't consume things. And that's the secret to making money. You must, to become a millionaire. Now, it won't make you a billionaire, but you can become a millionaire this way. A billionaire is you really have to own a lot of investment. You either have to own a company that was worth zero and went to $1 trillion, as Elon Musk did, right? And many others. But there are lots and lots and lots and lots of millionaires. You walk around town and run into millionaires all the time and not even know it. Why? They drive a Ford F-150. They're wearing a sweater from 5 years ago. They don't look rich, but $1 million is not a lot of money. It's a lot of money when you don't have any money. But to someone with money, it's not a lot because it doesn't change your lifestyle. If you had $1 million in cash, you shouldn't be driving a Lamborghini. That's what a poor person would do. A rich person still drives his used Ford F-150 because $1 million is not enough. It's just not enough. So all that money is tied up in investments. Money is worthless. In fact, money loses value for sure, guaranteed. So you got to own stocks. You got to own mutual funds. You got to own ETFs. You got to own real estate. You got to own cryptocurrencies. You got to own gold. You got to own assets that appreciate and ideally appreciate and provide an income. And never, ever, ever, ever spend it. Never spend your money. Always invest it. So how do you get money? Be productive. Exchange massive amounts of value for a reasonable price. And you will always have people that want to work with you. Then, go to your NOI basically. Your productivity is income. Income minus expenses. Your income should be higher than your expenses. You got to pay your mortgage. That's an investment, by the way. And you got to pay for food and put clothes on your kids and have a family vacation once a year, maybe twice, and you're golden. But after that, everything goes back into investment. Okay, so productivity is income. Then you have your NOI, net operating income, income minus expenses. So look, if your expenses are higher than your income, you're not going to be able to save and you're going to be poor. So invest everything you can. Own assets, own assets, own assets, own assets. Don't buy cars. Don't buy TVs. Don't buy knickknacks and crap. Save it all. You're like, I can't afford to buy knickknacks and crap. Because I got all my money tied in assets that are growing in value and providing income. They have returns on investments, which is new income, which you then just grow what? Your net worth. Okay? Okay. But if your income is equal to your expenses, your net operating income for you is zero. Then you add up your assets and you're like, well, I got a 65-inch 4K TV and a PlayStation 4 and 17 games at $60 each. Okay? Those are your assets. You don't own a home. You lease your car. You don't even own that. Even if you did, let's say you got your car, which you're still making payments on. But the thing is, your car is going to be worth nothing. It's losing value every month. Your 4K TV is losing value every month and eventually will be worthless. Okay? PlayStation 4, that's in demand again. But the supply is going up. So anyways, that's going to be worth less. I have a PS5. Okay? And 17 games, they're worth zero. So 5 years from now, all this crap that you bought is worth zero. And you have no net worth. Okay? So instead, if you didn't buy stuff like that and you just lived in true poverty where you're like, I can't afford a PlayStation. I can't afford a 65-inch 4K TV. Why can't you afford it? Well, you need to increase your income. And you're like, well, by getting a better job? No, by buying with whatever excess money you have, assets that go up in value and provide an income. You understand that part? So if you had an extra $500 a month, let's say, after expenses, your net operating income is $500 a month. So you're like, well, I can buy a PlayStation 4. It's only $500. And then a month later, you're like, I can buy a 65-inch TV. It's only $500. Oh, I can make car payments as long as it's less than $500. Whatever. All this logic, right? You got the money in your hand, so you can do this stuff. No, you can't. No, you can't. So what you do is you got your NOI. Let me put that back. You got your net income minus expenses is your net operating income. And so let's say you got $500 a month. And what you do is you plow that into a mutual fund. For how long? 30 years. You'll probably have $1 million at the end of that. You can do the compounding and stuff, whatever. Do the math. It might be $2 million. I think what will happen, though, as you age, this will go up to $700 a month and eventually $1,000 a month and eventually $2,000 a month. So when you're 50 years old, you might be putting, let's say, $3,000 a month into your account, or $2,000. I don't know. I don't know what the numbers are. Okay, whatever. But you're making more money at 50 than you were at 30, for example, right? So you keep adding this up. Why? Your number one goal is to build up your net worth. Someone might walk into your house and you're like, dude, where's all your crap? You don't own anything. And you look at them and you're like, I'm wealthy, but I don't have any money. Do you understand? Why? Because in 30 years, this will be worth 1 million, 2 million, 3 million, 4 million, 5 million. Now, the big thing you might own is a house over those periods. Very, very often you're going to find someone better looking than you, and you want to have children with them. So then you have some children, and you got to get a bigger house, and you decide to take some of your assets, which could be cash, and you plow 20% down onto a mortgage, and through amortization and through appreciation, the value of that house goes up. So you're just moving assets out of a mutual fund and into a house, and now you have some diversification, you have some real estate, and you have some mutual funds. But nonetheless, you feed the kitty every month. You feed these assets, you feed that assets. 30 years from now, when you don't want to work or you're too old to work, let's say you have $2 million. You're 65, you got $2 million. But you've been broke your whole freaking life. But you know what? Now, during your golden years, you can sit back and relax, smell the roses, play on your PlayStation 17. Okay? But that's it. It's easy. Don't spend your money. Okay? Don't save your money. Okay? What will JP Morgan pay you? JP Morgan Chase or Bank of America. Okay. How much do they pay you in interest when you save money in their accounts? 0.1%. Now, you saved your money, you're ready to buy a house. And you're like, hey, Bank of America, I want a mortgage. Okay, it's 4.25%. But you know what? They're just taking someone else's money and loaning it to you, paying the other guy 0.1 and earning the 4.25. Okay? So you don't want to put money in here. It'd be better to have something in the stock market that generally goes up 8% a year. Now that 8% almost never happens, but over the course of, let's say, your 30-year investment, on average, it would grow 8% a year. It might be down -10 one year and up 38 or 28% the other year. And the year after that, up 12. Okay, so you got all this going on. So as long as you time your exit, you should retire when the market is up. That's when you should end the game, because it's important how you play that game. But the long story short is 8% growth, okay? Plus every month you're putting in 20% of your income. Okay, so let's say 20% of your income, which is growing every year, okay? Compounding at 8%, compounding, which is not just multiplying, but compounding over 30 years, okay? When you're 65, to whoever asked the question, you will be wealthy. I don't know if that's $1 million for you or $200,000 for you. You have different costs of standards of living and costs of retirement and healthcare and this, that, and the other thing. But it doesn't matter. Over the long period of time, you'll be taken care of. You'll be fine. Okay? But if you buy a big screen TV today, you'll be eating cat food out of a can when you're old. So have that picture. When you're shopping at Walmart, look at this air fryer and ask yourself, if I spend money here versus investing the money, will this mean I have to eat cat food when I'm retired? When I'm too old to work, I have to eat cat food because I wasted my money on this stupid air fryer? Oh, but it's on sale. It's only $99. It used to be $175. Don't buy the stupid air fryer. Put it back. You don't need it. What you don't have, you don't need it now. Okay? Take the $99 and then compound it at 8% a year for 30 years. So in 1 year, you'll have 108. Okay? And then 120. And then 100 and, you know. Okay? 1, 2, 3, 4, 5, 6, 7, 8. It's not quite right. But in 10 years, you'll have $200. 10 years later, you'll have $400. 10 years later, now you want to retire. Okay. Your air fryer at Walmart cost you $800. Do you want to buy it now? No. Then put it back on the shelf and walk away. If you wouldn't pay $800, you are paying, right? No, that's the average for the stock market return over 20, 30, 40 years. Okay? It's not a bond. Okay? Okay? That is the long-term average return. So if you're like, well, you can't get that, well, then use a different number. Compound it any way you want. But when you're doing cash flow now, so, right? Wow, everything's going wrong. Discounted cash flows. You'll have to do the variable any way you want, right? You use any variable. Are you going to outperform the market, underperform, what level of risk, all that kind of stuff. So you can use, if you don't like 8%, use 7%, use 5%. It just changes the number. So let's say you use 5%. Okay, well then in 30 years, your air fryer costs you $600, okay, in the future. Now, this is how businesses think. This is how billionaires think. This is how wealthy people think. I want you to think this way. But right now, someone at Walmart is thinking, all my friends have an air fryer. I heard they're really cool. I heard they save time. I heard they help you have a better diet. I heard they make your French fries crispy. Whatever you hear, and you're like, I need an air fryer. And if Sally saw my air fryer and saw that it was nicer than her air fryer, then I'm the baller. Right? My air fryer is so much nicer than Sally's air fryer. Okay? And so you put it in the basket. So there's some sort of emotional need here to have an air fryer. But dude, you have an oven and a microwave. Now you need an air fryer? Why? Okay, someone else would say, compounding that investment over 30 years, I would be giving up $1,000 when I'm retired. I wouldn't pay $1,000 for that air fryer. I'm perfectly fine with my major appliances. By the way, your stove and your fridge and your microwave, you get 10 years out of that, maybe 15. Your air fryer is going to be broken in a year or two, and you're not going to use it very much. It'd be just a waste of money. How would you rather like to have $1,000? Brinsley says, yeah, and you might get more interest as your money, because you can negotiate bigger deals and stuff. But anyways, I want you to think about that, because it's how businesses think. Okay. And by the way, wealthy people, they're businesses. Because let's say you work for a startup and you make $25 million. Now you're fabulously wealthy. You quit your job and you hire some expert lawyers and accountants and wealth managers to take care of your money for you. And the first thing they're going to say is, well, you need to incorporate, you should do this, you should do that. And what very quickly happens is you're a business. And now you take your excess capital, you lock some of it in interest-bearing stuff, and then you lock some other stuff into owning the stock market. And then you go and you get involved in some sort of business opportunity where you own an apartment building or you own a percentage of an apartment building. And you got some money locked into that. And all of a sudden you're a business. And like literally these investments are structured as LLCs. And all the LLCs, they handle this, that, and the other, and all the tax things get taken care of, and expenses get written off, and all that kind of stuff. And then you got all these partnership forms you have to file with the IRS. But you're a business now, and so that's how businesses think. People make money. Okay, wealthy people make money because their money makes money. And they're businesses. And they don't spend. So you might laugh at how modest of a life I live. But when I'm too old to work, it won't matter none. Okay? I'll be eating fancy feast. I'll be eating the expensive cat food. Whatever. It's only money. But the thing is, don't spend your money. Compound it. Invest it. Be an investor. Peace on earth. May the pips be with you. May our profits be above average. If you're in my swing trading group or my day trading group, I will see you at 4 p.m. Eastern time in the swing trading war room. And we will set up next week's trades and probably even next month's trades. So once again, thank you for being part of our community and thank you for being in my life. Peace on earth. May the pips be with you. May your profits be above average.